Okay, so I covered BAC last Sunday, is somewhere around here. I talk about possible breakout. So if you can just break out, then probably can take a long position. However, just after Sunday, there is a reaction. So we got a 2 bars reaction. So the earnings is here. This is the earning. So on a 14, at least that's how the price react. So there's definitely entry right here. So let me show you that. If I go to the hourly time frame, so that's Friday 14 earning. Okay, so that is the earning bar, and before that, this is the 9:30. Okay, 9:30. So 10:30. So this is a pure earning bet. So in anticipation of it can run up after the earning. So why I take this trade that? Because first of all, when I select the trade, BAC belongs to the finance sector. So finance sector is generally doing well, despite that the S&P is under a correction. We can see that it's outperforming the S&P. So it's outperforming the market. So especially on this portion, so from here to here is actually had a run up, a sign of strength rally. So there's a backup action. So if I trade this, there's no confirmation. So it's definitely early trade somewhere around here, because right after the first bar, you can see that there is a volume spike, increasing of the volume. However, there is a demand tail. Um, Subsequently, it's just generally low, small spread candle. So in this case, if the entry is somewhere around here, the stop will be somewhere below the swing low or this swing low here. So they're the same anyway. So that's the anticipation on next day. So next day, if the market reacts positively to the earning, then we can expect it to just go up. And the most important thing when trading the earning, whether you have the confirmation or whether you just enter it premature, is based on a structure. So based on a structure, there is certainly the sign of strength rally. So previously this is the face, and we can probably tag this C B A. So this is a fractal, so a principle within another principle. So this is a sign of strength rally, and we just had a backing up action. So the next stage is also the reversal and then a breakout. So hopefully the earning will be the catalyst for it to break out. So in this case, it does take the earning as catalyst. So that as a reversal here, and also same as the is combo bar reversal plus a breakout. So on Friday there's a continuation to the upside. So when trading this kind of the earning is quite important to pay attention to two things. So first, you need to be very familiar with the structure. So for example, there's a buying climax, automatic reaction, secondary test. So even if you bet that is phase C, but eventually it still did not really have a sign of strength rally breaking out, but still if you buy it right at the low and your support is right there and the direction is correct. So that is very important. So here, this is a sign of strength rally. Here's a backing up. We still have not seen any confirmation because this is probably the confirmation, the breakout. But what we can anticipate is the next phase would be a breakout. So that is how you use the structure analysis to analyze a structure um, in view of the earning season as well. So in terms of the overall structure plus the volume, it generally is just looking bullish to me. And another thing, I think is the most important thing that many people just overlook is the broad market. So when trading the earning, is very important to look at a broad market as well. So if the broad market is very bearish, then usually you will see that the earning did not react positively. So it's quite important to pay attention to the broad market. In this case, we can see that the broad market is under correction, right? So correction, correction, another correction. So it's probably become clear when we have this bullish momentum bar on Thursday. But in this case, why BAC is different is we definitely see outperforming here. So there's outperformance in BAC comparing to the S&P 500. So I'm comfortable with that. So otherwise, it's best to wait for the broad markets to settle. For example, like right now. And usually when we have this kind of the volatility, maybe volatility here as well, and all this chunk here. And if the stock or the sector is generally on par with the market or even underperform, then all the earning happening right here, that will not favor to your direction. So this is generally how I feel it. And in terms of the rest, like even as long as you avoid this, something like this, or even the uptrend, or even a consolidation, that will be fine. So as long as you avoid this kind of the high volatility periods, like during the market correction, unless it's outperforming stocks like the finance sector, BAC. So that is a good example. So this is how I generally approach earning trade. Okay, so Dave just say how strong the breakout can be. What do you mean, Dave? How strong? This is the breakout bar. So you can judge how strong is the breakout. So that's generally how strong. 4%. I'm not sure if this is what you're asking about how strong the breakout can be. So it also varies from stock to stock. For the finance stock, I don't really anticipate like 10% or 20% move like the growth stocks or the tech stocks. So finance stock is generally quite low volatility. You can see that during the trading range from 36 to $42, $6 range is not very high beta stock.